Running a small business often means wearing multiple hats. You're not only the CEO, but also the hiring manager, the procurement manager, the sales manager, the marketing, and even the accountant. Now, if the business is new and not making much money, this arrangement makes sense. However, as your venture grows, so do you. It needs more management, and juggling everything yourself isn't a smart idea. So in this video, I tell you when and why you need an accountant for your business. And more importantly, I'll show you the secret to finding the perfect accountant to take your business to the next level. Make sure you stick to the end, and also I'll share some red flags you definitely want to watch out for. So like, subscribe, and let's get started. First of all, when do you need an accountant? Now, your business may not need an accountant in its early stages, especially if you have no employees. However, you absolutely need to hire an accountant when your business is finally making a decent profit or you're considering growth transitions. For instance, you've been doing everything yourself and now you want to hire employees to handle some roles, or you're considering introducing a new product line or even venturing into a new market. But why do you need an accountant in the first place? An accountant can be a significant addition to your business, and though their services come at a cost, an accountant might actually save you more money than you'll spend in the long run, in addition to guaranteeing IRS compliance. Here's the thing, the federal tax code is long and super complicated, with over 2,600 pages and each page averaging around 450 words. Is well over 1,000,000 words, which is longer than the King James Bible. For comparison, it's about as long as the Harry Potter series. Now, most of these tax laws are actually made for businesses, which means they affect you as a business owner. However, learning all these laws and provisions isn't practical for average business owners, which is where an accountant comes in. They have studied these codes in detail and help individuals and business owners navigate them for a living. So an accountant will help you create and analyze financial statements in your business. This gives you better insight into how much your business is actually making and spending. From this, they can advise you on expenses you can reduce to increase your profits. Also, prepare and file your tax returns correctly and on time. This means you avoid fines, interest, audits, and other financial and legal implications, as well as develop a tax strategy so that you don't pay more than is necessary in taxes. This includes maximizing your tax deductions, choosing the best retirement plan, changing your business structure, taking advantage of tax credits that apply to your business, and so on. Also, they help you stay up to date with present and future tax laws and changes. Now to the big question. How do you pick the perfect accountant for your business? Number one, first figure out what your business needs. Are you looking for an accountant to handle your taxes, or you need them for your bookkeeping and financial statements? Understanding exactly why you want to hire an accountant is the first step to finding the right person or firm for the job. You'll know what kind of expertise to look for, as well as questions to ask for day-to-day accounting and bookkeeping. For instance, a bookkeeper or a non-certified accountant can do the job. However, if you also need tax advice and planning, then you definitely should go with a certified public accountant or a tax strategist. Once you know your business needs, compare that to what the accountants you're considering offer. This is how you come up with your short list. Number two is check for qualifications and licensing. Any accountant worth their salt will have the qualifications to back up their claims. Let's break this down. So now, operating legally as an accountant is a three-part process. First, one needs to go to college. Most certified accountants will have at least a bachelor's degree. Some do advance their education by pursuing a master's. Next is the experience. In most cases, and depending on the state laws, accountants fresh from college need at least 2 years experience to apply for proper certification, which is the third step, the gold standard for accounting certifications. is the CPA, which requires an accountant to sit and pass a special exam to be licensed as a CPA. Other certifications an accountant might have include Certified Management Accountant (CMA) and Chartered Global Management Accountant or CGMA. In addition to these certifications, accountants may also be accredited by professional bodies by sitting and passing the relevant exams. Accreditation simply means that the body or organization in question formally recognizes the accountant as competent in their job. It's like having a badge of approval and adds to the accountant's credibility. Now, I like to clarify that accreditations is not only for CPAs. Non-certified accountants may seek accreditations like the accredited business accountant to be more credible and operate as accountants in some other states. Number three is next up, you want to look for relevant experience. Just because an accountant has over 20 years in business doesn't mean they're the right one for you. The type of experience they have does matter. So don't find out if they actually have experience handling tax and accounting matters for businesses such as yours. Just because an accountant has over 20 years in business doesn't mean they're the right fit for you. The type of experience they have doesn't matter. Why is this important? An accountant who has experience with your type of business and industry will have a better understanding of your needs, as well as the tax codes that apply to your specific business. And they can help you find and take advantage of tax breaks that will save you money. Number four is you also want to look at availability. How accessible is the accountant you're considering? While this may not seem like an important factor at first, it can soon become a pain point for your business. You see, most big accounting firms tend to concentrate on more large corporations, which have bigger budgets to spend, often at the expense of the small business. In the end, you find yourself being allocated to junior accountants or worse, outsourced firms. That's why right from the bat, you want to vet your potential accountants to be sure they are perfect for your business. Number five is consider the pricing structure. Service charges are undoubtedly one of the key considerations on your mind when choosing an accountant, especially if you have a strict budget starting out and you want to pick what works best for your business. Now, accountants do in fact have different billing systems. The three main types of pricing structures are hourly billing. This is really one of the main ones. This is self-explanatory. Your charge base work on hours worked at a fixed hourly rate. Also have fixed rate billing. In this case, the accounting firm comes up with a fixed figure depending on the complexity of the work. Also, they have project billing. So this accountant decides how much they will charge you for a specific workload. For instance, an auditing job, filing the year's tax returns, etc. Number six, most importantly, is book a discovery call. If you can book a discovery call with your potential accountant, you definitely want to grab the opportunity. Now, I'm saying this because it's not always possible, as accounting firms can be pretty busy, especially during tax season. In fact, any accountant worth considering is busy during tax season. That being said, a discovery call allows you to ask the right questions and basically get clarity on anything in doubt. So, what can you ask during this call? You can start out by asking, do you offer tax planning? A good accountant should do more than just file tax returns. Also, do you provide year-round services? You want an accountant who will be regularly involved in your business. How much have you typically saved your clients in taxes on the average? They should be able to give you a good range on this. What is the most tax savings you've seen a single client? A good accountant should have a specific figure in mind. Now, you can ask this as well. In case of an audit, can you represent me in front of the IRS? How do you charge for your services? You want to know the upfront and continuing costs for your business. Make sure you ask if they can provide a quote on workload as opposed to profits. Some accountants also offer a fixed monthly rate, which can be great for your business as you always have them on call whenever needed. Now, in the same way you know all the good things to look for in the perfect accountant, you also want to know what to avoid. So here are some red flags to watch out for when looking for an accountant. The accountant asks you to sign documents without any explanation. They also tell you not to worry about keeping business receipts, which that's a major red flag. They tell you that they only give an estimate of their charges after your tax return is determined. They tell you that you can take a write-off because everyone else is. Remember, questionable write-offs can cost you a lot more later down the line. And another one is they only communicate with you during tax season. Also, they refuse to sign any tax returns and include their IRS preparation tax identification number, P10. This one is a major red flag as it means the accountant isn't actually a CPA. Remember, a good accountant is an asset to your business. So have you had an encounter with a bad one? Share your experience in the comments below, and definitely like and subscribe and turn on your notifications for more. Till next time.